Hello fellow traders, I'd like to introduce you to Trading the News AfterShock. Now it's quite common knowledge that it's always a dangerous thing to trade the news, but what we're doing is we're following the news event about 1 hour, possibly up to 2 hours after the event took place. There are three possible outcomes from a news event. The first one is that it's very positive, the second one very negative, or the third that it's as expected. And as you'll see in this video, you can actually successfully trade all three of those states. Now if you look at the actual charts displayed on the screen, there are two lines, a solid line and a dotted line. The dotted line is actually showing you a possible breakout, but in usual cases this is a false breakout, and the solid line is where we would normally put our entry point for our stop limit order. Now the Forex economic news comes in two types, scheduled news and unexpected news. Scheduled news can be seen in various websites and periodicals, newspapers, things like that. Unexpected news, you just don't know it's going to happen, and if it has a devastating effect on the market, it's often referred to as a black swan. There are many sources of scheduled economic news that you can find, and four that we use on the web are the Forex Factory, Daily FX, Forex Peace Army and FX Street. I tend to prefer to stick with just the Forex Factory because they give up to the minute news bulletins as well. Quick look at Forex Factory here. If you notice the gradients of these, red being the most important, then amber, then yellow, then white, they all share a similar structure with previous forecast and then actual news. We look at the next one. This is the Daily FX. Again, here we're using red for most important, amber and then blue. As you can see, they are also displaying the same previous forecast and actual. Then we move on to Forex Peace Army. Similar situation here again, but this time they use a star system, 5 being the most important piece of news. And then finally we move on to FX Street. And FX Street have a sort of simple exclamation mark with 3 exclamations being the most serious. And that basically is the 4 websites. Now before we move on, I'd like to show you why I like Forex Factory as the best. Apart from giving you a daily breakdown at the top, you get the news bulletins, you get little bits of currency information, you can look at the different time periods for the different markets. There's a wealth of information here on one screen, and if you keep this up and running, you can actually keep abreast of news as it breaks. So the question is, why trade the scheduled news reports? Well, you know exactly when it's going to be released unless it's leaked early. The price action follows a set pattern afterwards with high probability trades. If the announced news is what was expected, you can still trade its current cycle. If the price is going down, there's no reason now to think that it will change because of the news. There are many forms of scheduled economic news, and I've listed the main ones here. Not all scheduled economic Forex news sources agree on what is in their opinion influential to price action. Use this list if the source you use downgrade a report. Those listed above do influence the price action, so upgrade it to a level of importance. So let's look at scheduled economic news. This refers to the scheduled reports and press releases from different governments and financial institutions in the world. Due to their nature, these reports usually have a prediction made by expert market analysts before their release. When the predictions are right or close to the actual outcome, there's usually no major or unexpected movement in the Forex price action. However, if the prediction is way off the outcome, the market may move in large swings or spikes. There is much speculation about which way the currency price will go, and the period before usually indicates the market sentiment on where it will go. Quite often this is wrong, however, some news is leaked early and this may be driving the market. Now let's look at the unexpected news, also known as black swans. This is the news which may be expected or not, and the announcement date and or time is not known. It creates chaotic moves in the market and can have the effect of a tsunami on a rowing boat. If you are riding with it, your profits will be enormous. However, if it hits you the wrong way, your boat just sank and it is possible you could lose your entire account. Whether you trade around the news or not, you should keep an eye on breaking news. On Tuesday the 6th of September 2011, there was an announcement that the Swiss were going to support the failing euro. This news was released at 9:02 AM Greenwich Mean Time. Within a heartbeat, the Swiss franc collapsed, pushing all major currencies. The Great British Pound jumped up 617 pips in 5 minutes and rallied to 985 pips before settling down to create a support at 765 pips from the 30 minutes earlier. This was truly a black swan event. Now let's look at a specific scheduled economic news event. The PPI input month by month is highlighted in red and is considered important. The forecast is seen to be worse than the previous results. What we're looking for is an actual report that is better or worse. This should mean the sterling pound is more or less attractive against its matched currency pair. On the Forex Factory site, you can access all the information you need by clicking the detail button next to the actual price. Now if we look at this information here, the usual effect, if the actual price is greater than the forecast price, then it's good for the currency. You can also look at past performance history here as well, which can be useful. The actual figure released is significantly higher, red means bad, than the forecast. This should mean that the Great British Pound is less attractive and will lose value against its matched currency pair. There are other pieces of news which could add weight, which were released at the same time. They are not so significant in themselves, but may increase or decrease the impact. The Great British Pound pairs all major currencies, including those listed below. In this example, we're going to focus on the Great British Pound Japanese yen. The pound news figure released is significantly lower than forecasted, which should mean that the Great British Pound is less attractive against the Japanese yen. The pound should fall against the yen. For this example, we'll be using the data feed from Alpara UK, which is 1 hour ahead of Greenwich Mean Time. So although the news is released at 9:30, as far as the chart's concerned, it will be released at 10:30. Here we're looking at the pound yen on the 1 hour bar 1 minute before the news is about to break. What we're waiting for is the close of the bar following the bar the news was released in. When we have this, we can draw our entry lines. What we're looking for is the highest high and the lowest low of the news bar and the bar that follows. And when we have those, we can draw our entry lines. Now, because the news was negative and bad for the Great British Pound, we're only really interested in the bottom line. Because we're using TradingSticks in this example, we can actually change the trendline properties to a sell line touch, which will automatically open a trade if the price touches the lower line. Normally I'd remove the upper line, but I'm leaving it here in this case just to show you how traders can be caught out by a false breakout. Now remember, we're trading the news AfterShock here. The news is negative and should go down. If the trade continues up, then as far as we're concerned, we've missed the trade. What we're looking for is a definite downward movement, and there it is. And because of the momentum of the news, it should continue even further down. And there it goes. A red exit line ready to take us out, and there it was, 102 pips profit. Not a bad trade at all. And the move itself did continue on a lot further, but it moved back so far that quite frankly, unless you've got a huge stop loss, you would never have actually caught the whole trend. But the potential was there. I'd like to show you some sample charts now and demonstrate both positive and negative news and the impact on the charts itself. Don't worry if the charts examples go by too quickly, there are instructions at the end of this video where you can get a complete copy and a copy of the influential Forex news list. We hope you enjoyed this video. Look for more like this in the series. For a PDF of the influential Forex news list and the positive and negative news charts, go to www.tradingsticks.com and select Contact Us button. Request a copy of both and we'll send them. Whilst you're there, why not check out TradingSticks? It could make the difference between getting by and turning pro. This video was brought to you, sponsored by TradingSticks.com, the art of visual trading. See it, draw it, trade it.